Good morning. It's my pleasure, my honor actually, to welcome Polish Finance Minister Magdalena Rzeczkowska to the Atlantic Council as part of our series of hosting finance ministers who have found their way to Washington for the IMF week. I'm Daniel Fried with the GeoEconomics Center and the Europe Center of the Atlantic Council. There are three salient facts that frame a discussion with this or with any Polish finance minister. The first fact is that Poland over the past generation has worked a miracle. Poles overthrew communism in 1989 and proceeded to reconstruct their economy from the ruins of the communist system. Very few people thought they would succeed, but they did succeed. In the course of one generation, Poland deepened its democracy and more than tripled, almost quadrupled its GDP. One generation. These were Chinese levels of growth without Chinese methods of political control. That is fact number one. Fact number two is the current stresses on the Polish economy. Inflation, high, though not unique to Poland, growth under some pressure, budgetary pressures, and these pressures are not the result of events in Poland, but are largely the result of the third salient fact, which is a major war to Poland's east in Ukraine. Putin has attacked Ukraine, trying to conquer it. Poland is the logistic base for American and European efforts to support the Ukrainians in their fight for their lives. But the stresses of this war on Poland are significant. And whether it is energy, and Poland has had to redirect its energy supplies, although it had prepared for that moment for many years, or the disruption of millions of Ukrainian refugees, or whether it's simply the stresses of disruption to European trade. So Poland finds itself on the front lines of freedom once again, building on decades of economic success and democracy. And the Poles know in their bones what it means to lose freedom. They have been a magnificent friend to Ukraine, a great ally of the United States. Polish-American relations perhaps have never been greater. So with those words, it's my pleasure to turn over the discussion to the moderator of today's session. And Charles, the floor is yours.
Well, thank you, Ambassador Fried, for those very moving words. It is indeed our very great honor to have the Finance Minister of Poland, Magdalena Rzeczkowska, with us right at the end of what's been a very busy week for the Atlantic Council, organizing meetings with over 10 finance ministers and central bank governors. But this I have very much been looking forward to. So thank you, Minister Rzeczkowska, for coming to see us. It's been an even busier week for you with all sorts of bilaterals with your usual counterparts and perhaps some slightly less usual counterparts, which is, of course, the virtue of these meetings. It's been a very special Polish week for us as well at the Atlantic Council, because your Prime Minister, Mr. Morawiecki, was with us just yesterday in this room talking about everything that Poland is doing for Ukraine. We will also discuss that in this session, but I was wondering if we could start with some numbers. The WEO has been released, and the prediction for Polish growth this year is reasonably so, just 0.3 percentage points of growth. That's down 2 on the previous prediction. I think everyone watching would be quite interested in your take on which factors have held back Polish growth. Many of them are to do with the war. There was a very quick recovery from the pandemic, but now we've slowed down. So I was wondering what your take was. Thank you.
Thank you very much. Thank you for inviting me for this debate. And many thanks to Excellency Ambassador for really great words about Poland and about our success, which we managed to build our economy, our country, and build democracy, very strong democracy in Poland. Poland before regaining the democracy and independence, regaining freedom. So thank you for these kind words. Yes, the Polish economy. It is an effect of what we did for many years, building of a strong economy, that Polish economy, Polish fundamentals are very strong, and the Polish economy is resilient. And we had first proof of that after the COVID-19 2021. It was a quick rebound of the economy you mentioned, but it was really much faster than the rest of the region, 6.8% of GDP, and starting 2022 with even better result, over 8%. But unfortunately, there was an outbreak of war in Ukraine, and the situation changed, and the economy started to slow down. And the main factors which are difficult and are causing the slower growth is, of course, that the war in Ukraine meant energy prices crisis, higher energy prices, higher food prices, further shortcuts in deliveries in the chains, supply value chains. It meant also the refugees coming from Ukraine, so the support which was needed to help them. It meant also for, of course, the energy prices and the energy crisis, food crisis. It meant higher inflation. This meant that targeted measures to support our households, Polish citizens, but also Polish economy, Polish companies were needed to be introduced. So a lot of factors which a lot of crises, let's say, and factors which really were the demand from the government to be active, proactive with fiscal policy, but also with monetary policy, of course, to fight inflation, but on the other side with fiscal policy to provide security for the economy, security for the households, for the citizens, and for the refugees which came to Poland. But nevertheless, 2022, which was really a demanding year, full of those challenges I referred to. Finally, we have managed also to achieve a growth in our economy by 4.9%, so which is still very good result, and also with quite I'm proud about our deficit level and debt level, because we have finished a year with 3.4% of deficit, to general government, I mean, deficit, and 49.1% of debt. So taking into account the European Union levels, we are one of the champions, because average debt level in the EU is about 90%
yes.
GDP.
Quite
yes.
a bit lower, and several above
yes.
100% in 3 digits. I was reading the Article 4 recommendations that came out this week for Poland. I thought quite a sort of balanced report, recognizing all the efforts that Poland is making on the front line with the war, supporting Ukraine. But there was quite a lot about the fiscal stance, and perhaps a suggestion that some of the measures that needed to be brought in last year, so the inflation protection shield, the reform of the tax, personal tax, those things created a slight stimulus, which in an environment where you want to bring down inflation, may not be the direction you want to keep in permanently. So I was wondering if you could help us imagine how you're going to pull back some of the stimulus to help your central bank rein in inflation.
Year 2022 is already over, so some of the measures were already ended, so withdrawn.
What's been the reaction?
A reaction was good, because we have not withdrawing some of the measures. We have implemented new ones, which were organized differently, with a more targeted aspect, and also like on energy, capping of energy pricing, also having this aspect which will allow for savings and encourage citizens to save energy. So we are monitoring situation. We are rearranging the measures, like other European countries, because we are all under such kind of a pressure. But of course, one might say that the measures which were introduced in 2022 were too broad. The fiscal policy were maybe too broad, but I will not agree with that, because even anti-inflation shield, okay, it was the lowering the VAT to the 0 or 5% for certain kind of
Food and
goods,
energy,
food,
mainly.
energy mainly, yes. So it's yes, but it was also lowering inflation for some percentage in 2022. Of course, withdrawing the measures, there was a risk that the inflation will grow. Therefore, we have changed the measures. So, withdrawing the anti-inflation shield, we have introduced capping of energy and heat prices, and also with gas prices, and also with the oil market, the situation stabilized, and it allowed to keep the prices on the level on the stable level. But there were also other challenges, like I said, the heating prices, gas prices, and some transfers to the poorest people to buy coal, buy other sources to heat their houses. They were just needed because we were facing in the summer last year, in early autumn, the very real danger that the winter will be very cold,
yes.
and the people will be freezing. So fortunately, the winter wasn't so cold. It was warm, and we survived. So as I said, anti-inflation shields, they were over, and other measures came in. We have introduced the mortgage holidays also because the increasing of interest rates by the central bank, they made the biggest effect on the mortgages and on the housing markets. So and also they were correct because the inflation in Poland is mostly imported. Inflation comes from the energy prices and food prices in the major part. So to lower the inflation on this by action of the central banks, we have to see what Fed is doing, yes, and what European Central Bank is doing. They did also their work, so inflation is dropping down. But for Polish Central Bank, the most important was to slow down economy a bit, but not with causing a hard landing, but rather a mild landing. And it was done by especially to the housing market and to the mortgages. Then the kind
if
of...
I could just ask a small question on the mortgages. This is a topic that I think many followers of Poland are familiar with, at least since 2015, with the Swiss franc mortgage episode, which is ongoing. Another recommendation which has been issued in Washington is to do with targeting the mortgage holidays a bit more carefully. Again, a feeling that perhaps the stimulus is misplaced sometimes and that you need to be more targeted. Can you tell us anything you're doing on that?
Yes, but it was difficult to target those measures and to draw the line when you are already in need or not. Your income is high enough or not. So we have decided not to really divide people, but to introduce a measure for all, but only for those two years. People were a huge part of people. They just paid in advance their mortgages, so the money was used properly, let's say. And the FX mortgages and Swiss francs mortgages, yes, there's a very important issue which is also doesn't concern only Poland, but it's a global issue. Is financial stability and stability of the banking sector. We have recent cases with examples with American banks, with Credit Suisse. Fortunately, in Poland, our sector is quite resilient and very well supervised. Of course, we will monitor situation, but the major risk for our sector is the issue of Swiss francs mortgages and the expected judgment of European Court of Justice. But still, it's not that we are waiting for the big bang, and the solutions were implemented already. Banks are we have the court's judgments on the mortgages, but we have also some settlements which banks propose to their clients, and the number of settlements is growing, and the reserves are already there in banking sector. So it is a challenge, but it is manageable, and we are still in frame of the stability mechanism in Poland, and the institutions responsible for monitoring and supervising the banking sector. We are working on solutions and also we are monitoring situations.
Yes. So. Thank you. I think it's very interesting on the mortgages and on the stimulus or slightly more conservative stance. If I could take you to a different topic, but one that is fully within your remit. There is 75 billion euros on the line for the Polish budget, depending on whether the EU sends them to Poland. Some of that is the next-gen EU funds, about 35, and the remaining is normal structural EU funds, which Poland has received for many years, continues to receive. And I think most people would appreciate Poland has spelled quite well, because we've seen the development of the Polish economy over the past decades. So this does depend on something that isn't within your remit. It depends on judicial reform, and I think the Prime Minister had an opportunity to answer questions on that yesterday. So I'm more interested, if I may, in just what it means as a finance minister to be dealing with the option or not of 75 billion euros coming or not. How do you plan for the two eventualities?
Yes, it's first of all we have to divide two issues because we have less, let's say, less importance, maybe not a good word, but less weighing on a budget part of money, which is the National Recovery Plan, because the money is lower there, and the rest of the funds on the cohesion policy, cohesion funds. And here we are realizing projects, and that money is flowing to Poland, and we are ending the previous perspective, then we are waiting for the other one. For the National Recovery Plan part, the money is important because what we want to do with this money is important. There is mainly green transition, just transition, and digitalization infrastructure investments, so crucial aspects. But we are not waiting, and we are not waiting with realizing the projects because the clock is ticking and time is running. We are using the money which were devoted for the in times of COVID-19 pandemic for the companies, firms, and which were supposed to be returned, and they were returned to our development fund and are used for pre-financing the projects. So when the money will be there, we will just finance with the EU money, and the money will return to the fund. So we are doing our job. Of course, this is very political issue, if the money will be there or not. The reform, according to the European Commission requirements, the amendment to the law has been accepted by the Parliament, but of course there are some doubts. The President has some doubts about the legality and if it is in line with the Constitution or not. And I think it's very good, if there are any doubts, it's better to check it and to have certainty that we are not causing much more trouble than we had before.
Any idea on timing?
I know just recently I had an information that the Constitutional Court will have first sitting at the end of May, and we will see. From that, the procedure will start.
Excellent. I did see in my research for this interview that the investment rate in Poland is lower than it has been. So I think this decision is weighing on investment decisions for the moment. So I think it'll be positive if we do see that decision reached and some of that money coming to Poland. Interesting to hear that you have this alternative source of funding that you've sort of grandfathered from COVID. I think people should also have a look at that, given that Poland is still a very interesting market to people, and that is where I wanted to take you. Poland's stance on investment, Poland's stance also on global development. You've been here for a week now, almost a week, talking to the World Bank, the IMF. I think I'm simply curious about how Poland sees the work of these institutions in your region, but also how they're helping your neighbor, which is fighting a war, Ukraine. We've also had some very interesting meetings with the EBRD, an institution that you know well this week. So I'm curious about your feeling on the negotiations going on, Poland's stance on reform in those institutions, but also how they can target help to Ukraine.
We are very engaged in cooperation with all the institutions, with World Bank, the World Bank institutions, with IMF and IMF institutions, but also with MDIs. And Poland is one of the, I think that one of the biggest users of the money coming from those institutions in Europe. They are spent for the local municipal investments, for the infrastructure, but also for from EBRD for help to Ukrainians, Ukrainian refugees, for the green transformation in Poland, and many others. And it is very important also that those institutions their answer is timely and proper for the Ukrainian macro financial stability and also for the quick reconstruction and for the rebuilding of Ukraine in future. We were fighting very much for the IMF fund. It is very good that it has been accepted, that it gives this stability, a kind of a stability for Ukraine for 4 years. So not only just covering some very close budgetary needs, and also for other financial institutions. For Poland, the most important, I think, the closest to heart is the European Investment Bank, because this is the European bank. We have also we want to contribute to the new fund which was created for Ukraine, and I'm very happy that it happened, and the money also will be used there. As for the MDIs, let's say reform and functioning, I think the most important is that they should stick to their mandate on the one hand, and on the other there are new challenges which has to be taken into account. Those challenges are, for instance, in the green transformation, it's for instance the issue of nuclear power, because some of the institutions are not financing, like for instance mentioned by me, the European Investment Bank. Hasn't got it in the portfolio, but I think it is really good to see that it will be also a game changer. It is needed for the security. So this should be taken into account. Another very important aspect is ownership, because sometimes I feel that countries are really forced to be happy with some kind of investments of help, which is not on their priority. So it is important to have this ownership and to be more partners on the instruments which are used.
So sticking to mandates, but also thinking of updating those mandates for common challenges. In that light, I'd like to ask you a little bit more about the 3 Cs initiative. This is something that Poland is pushing very strongly and energetically. It's something that the Atlantic Council is very happy to support. Whenever you're in Washington, I remember a very pleasant dinner where finance ministers from, I think, most of the participating countries got together in DC to talk about the 3 Cs initiative. That was 6 months ago. So what progress has there been, and is there any Ukrainian focus that will emerge from it?
Yes, I was present there, so we were discussing the 3 Cs initiative, but mostly in the frame, let's say,
specifically for Ukraine.
Specifically for Ukraine, yes. So
there's more to say.
That's more to say, but that's good that the 3 Cs initiative includes the issue of Ukraine and the rebuilding of Ukraine in the portfolio. Yesterday, Prime Minister said that the issue of the initiative, 3 Cs initiative, is quite a challenging or difficult, let's say, initiative, because it needs understanding of all parties. It needs cooperation. It needs sometimes some compromise, but it is really an important instrument to leverage the position of the Central and Eastern Europe countries and to build this north-south access in infrastructure, which is really, which is and will be crucial for the future growth of Europe and of the region. So it's good. And taking into account these demands, these needs for the green transformation, for infrastructure, for digitalization, but also for reconstruction, rebuilding of Ukraine, and also for creating some new order, because we are in the middle of creation of new security, new economic order. It is important to have much stronger and resilient instrument and regional cooperation, supporting regional cooperation.
And cognizant as we are of the difficulties, what would you like to see happen first through the 3 Cs initiative? 5 years from now, what would you like to have been achieved? Any priorities?
I think for the most important, it's difficult to say what is the most important. I think, of course, finishing the infrastructural projects which are there, it is important, and the financing is important. And I know that I'm not managing the fund and the 3 Cs initiative, but I know that there are some difficulties with financing of initiatives. But like in every other aspect, I think it's financing and capital will be crucial for all what we want to do and for all what is on our agenda, because we have this, as I said, green transformation and reconstruction of Ukraine. This will need mountains of capital. So it is also worth to see Poland as a hub, regional hub for capital market development, but also for sustainable finance, for ESG data and ESG data hub. And we have such an ambition and such a strategy to develop our own, let's say, national capital market, but also to be a hub for the region and to have such Warsaw capital center, like London has its own Warsaw.
I believe that some jobs have moved directly from London to Warsaw. I'm aware of some friends of mine who've made that move.
Yes, because we have what we also do is to encourage not only foreigners but Polish people to come back to Poland and to work for our country in Poland, and we were successful in that.
Absolutely. So I wanted to give you an opportunity to actually talk about the support for Ukraine directly, bilaterally, and also what Poland is advocating for. I mean, Ukraine has been the thread through our whole conversation. We talked about the war being a factor behind the difficulties for the Polish economy. We've talked about reform of the multilateral institutions, and there's a Ukrainian aspect to that. But there's also the bilateral aspect. We've discussed it a little bit before we came in. So I wanted to give you an opportunity to talk about what that's like, the volumes involved, and how much effort has gone into it.
Yes, so I will start with the volumes maybe. So from the beginning of the war, 10 million Ukrainian refugees crossed the Polish-Ukrainian border. 1 million decided to stay in Poland. They have received a special social number, and a lot of them is already working. But it's worth to mention that 83% are women. So a lot of Ukrainians which were present at the Polish labor market, they were men which were working in the construction, in the ICT sector, in transportation. Women will not replace them. So, but Polish labor market is very strong, and almost 800,000 new jobs has been created, and Ukrainians find very easily a job in Poland, and that's the good news. The whole package, let's say, of support which Poland gave to Ukraine in 2022, it started from, of course, humanitarian support, hosting refugees. Refugees in Poland, they are treated and they live like an ordinary citizen with all the health care insurance, access to schools, access to kindergartens, access to some social programs, benefits. So ordinary citizens. And there is also an issue of housing, because they're all over Poland, and we're not creating any accommodation center or whatever you call such institutions. So ordinary citizens. Then we had, of course, the military supplies to Ukraine. We have to increase our own budget and military budget, because we have to replace the military equipment which we gave to Ukraine, and also to increase our defense capabilities. So in total, the total amount of the spending for Ukraine, it amounts about up to 2% of GDP, so it is around 50 billion Polish zlotys. It's a really important position in our budget, and unfortunately to say, but we didn't receive so many funds from the European Union and from European funds to cover this support. But nevertheless, it's something which has to be done, because Ukraine is fighting for our future, for our values, for our freedom, and it's just necessary. Of course, there are challenges, like recently the issue of grain, which should be transported to European Union through to third countries through the solidarity lanes. It stayed partially in Poland, and we have a problem now.
Because of the bottleneck?
Yes,
didn't have the capacity.
The capacity, and also because of the pricing differences, and some companies just wanted to earn on that. But the issue is also an European issue, because solidarity lanes should provide for the possibility to go through, for the goods to go through and to go to the direction and to be imported into the North African countries where there is a hunger issue. But that didn't happen. So there are some challenges. There are also some good things because Ukrainian refugees, as I said, they are working, they are paying taxes, they are adding to Polish economy. But of course, together with Ukrainian governments, we wish that those people return as soon as possible to Ukraine because this will mean that the war is ended, over, and we have peace, and the Ukraine can grow also and be rebuilt and
hopefully become a prosperous trading partner for Poland. Well, thank you, Mr. Rzeczkowska. I had practiced for this wonderful opportunity to hear the all-important Polish perspective. This actually concludes the public portion of our IMF meetings, IMF-World Bank meetings on the sidelines, but it's been an important moment for the Atlantic Council, and I'd like to take this moment to thank everyone that's been involved. And that goes for everyone in events, everyone in operations, everyone in the comms team, of course in the GeoEconomics Center, which has been working extremely hard in the weeks up to this, but also in our partner centers, both geographic and thematic, who've helped us with all the relevant ministers and central bank governors who've come. So it's been a very exciting, though busy week, and the next time we do this will in fact not be in Washington, D.C., it will be in Marrakesh, because this entire exercise, which takes place twice a year in Washington, is being displaced to Marrakesh in Morocco, and we're all very much looking forward to it. Will you be there, Minister?
Yes, I plan
that's
to
wonderful.
Be there.
Hopefully you'll come to speak to the Atlantic Council again, because we will have a pop-up venue, and hopefully you can come and visit us there.
Thank you for the invitation.
Thank you for your participation. Thank you to everyone watching online, and a special thanks to everyone who's made this week possible. Thank you.